Hi, everybody, and welcome to episode 10 of Mrs Mummypenny Talks, season 4, which is the season that I should grab, celebrates my book. Here we go. The Money Guide to Transform Your Life. So every episode, I interview an expert in the business. I have an absolute expert with me today to talk about the various chapters of my book. And we have moved on to part 2 of my book, which is all about the future. And if you're talking about the future, you have to start with talking about protection, insurance and wills, that kind of stuff. So I have brought Kathryn, my wonderful friend Kathryn, onto the podcast to talk about our favourite subject in the world. Welcome.
Hi, thank you for having me. And I'm really excited to be talking about this because, as you say, really important subject and something that I absolutely love as well. And I will try and behave myself and keep to the time frame.
Yeah, as I've already explained, the goal is always to keep these podcasts to like 40 minutes, but I never achieve it. The one I did on debts, which was episode 4 with Sarah Williams, was 70 minutes, a really long podcast, but it was packed full of incredible information. And when I listened back, I couldn't edit any of it out because it was brilliant. So yeah, we'll see how we get on.
But 71 minutes then. 71 minutes.
Yeah, let's talk about protection and wills for 70 minutes. That'll be fun. We're also we will meander onto other various subjects as you come to expect from Mrs Mummypenny Talks. And I know that Kathryn's really passionate about women in finance as well. So yeah, we'll see where we go. But to start off with, because I have been on a podcast with you, but when we were both guests.
Yes.
But I've never interviewed you before. So tell me who you are, where you come from, and how did you get to where you are now?
Okay, then. So I own Cura Financial Services, and I am a protection advisor, and I'm what's known as a specialist protection advisor. Sorry if you just saw that little tail there. My little puppy's just coming to keep me company as well. We'll just see that every now and then in the background.
Yeah.
So basically, I'm here to help people if they're wanting things like life insurance, what's known as also critical illness cover and income protection. And I do it in quite a few different ways. You can do it, and we'll chat about it, I'm sure, but there's things you can do it personally, you can do it through a business in a couple of ways, you can also do it internationally. And I'm seen as a specialist because I kind of do all the areas in a sense that kind of covers. And the whole point of it is that it's all about protecting your finances, protecting your future. And I think sometimes we kind of like have a mix because a lot of people want to kind of talk about these things, but then at the same point, they're kind of like, we're talking about things that people don't really want to talk about. We're talking about death. We're talking about the potentially high likelihood of being diagnosed with a strong-ish cancer and other situations. And we kind of like have to do this thing of like confronting it in the sense of like, let's do this in sensible, but then also as well, it can be quite emotional doing it and getting involved with it. And it'd be quite tempting to kind of step away. Yeah. And then come back and step away and come back. But basically, I come, I say, from Cura. It's a company that I own with my husband. We're based in Filey in North Yorkshire. Now, some people might know Filey. If not, possibly think of Scarborough. That's kind of where we are, nearest to that. And we've been running for quite a long time now. And we, as well as sort of specialising in protection, we also really specialise in helping people with certain circumstances. So people with health conditions, or that's like a lot of what we do, but there's also people who maybe have high-risk jobs, or maybe doing something high-risk sporty-wise, or travelling somewhere that's high-risk. And that all came about really because when I went for insurance, when I'd sort of kind of joined the industry, I finished uni, joined the industry, and I went for some insurance, and I really struggled to get it. Wow. And I have to say things have gotten a lot better since 10 years ago. But when I first went for it, I was living, and I still do, live with generalized anxiety disorder. And I have something called hypermobility syndrome. Yeah. Basically means I'm a bit of a contortionist. And it was all but 2 insurers declined me insurance.
So those 2 things, so you've got an anxiety disorder and you've got hypermobility, and you were refused insurance.
Yeah, by all but 2. to the point that we didn't even get to the application stage, because what we do is obviously we do a lot of research beforehand before anybody goes, because the last thing you want to do is apply, get knocked back, and then try someone else. So we always do lots of research to see which one's going to be right before we even get to an application. And yeah, it was all but two, because I'd had some agoraphobia as well. And it'd been a few years since I'd had that, you know. I'd just completed my doctorate. I had a house, you know, I had a job, I was working full time, I had a family. And but all of two of them, and it was because of my anxiety that they said no. And obviously I have to say though, mental health and insurance in the last 10 years has absolutely changed. It is far more understanding of situations now. Well,
I need to tell you about a situation I experienced then, because I don't think it has changed that much. But anyway, carry on with your story.
Yeah, absolutely. I was going to say a big thing as well, it still does come down to the insurer that you look at as well. Some insurers can be quite good with mental health. Some of them are the ones that I would not necessarily go towards. So yes, we will absolutely have a chat at some point about what you've been through. And it does depend upon the policy type as well. But yeah, so I was having all this, and we just turned around, me and Alan, we looked at each other because we're both advisors, and we just said, if I'm having this issue and we're in this, you know, and we're struggling, what about the regular person who doesn't know anything about insurance? It's like one of the reasons doing this podcast, you know, is the fact that not everybody knows all the ins and outs, and so many technicalities and different things. And then adding on something on top that can potentially make accessing it a little bit tricky. What about all those people who are maybe, you know, instead of going to all the insurers, by the time they've been knocked back by 10, they're probably thinking, well, there's no point trying that last couple because no one's going to cover me. And so we started really specializing, and that's how we've gotten to where we are and how we are known for what we do, is because of the fact that we are able to find insurances legitimate. It's not sort of like something like kind of some backdoor insurance or anything. It's legitimate big insurers.
You know your stuff, and you know
exactly
the outs of every insurance provider.
Absolutely. And it's really, really good. We've grown quite a bit. So kind of when we first started, there was around 11 of us. We're 26 people now.
Wow.
And yeah, so we're doing really well with it, and we're still growing. And it's just, there's so many people who need the support and help. And I think people don't realize just how much different things can influence the insurance when you're going for it. So it's interesting.
Yeah. So let's take a step back and go a little bit back to basics, because we need to cover 3 different types of insurance, I think. So we'll start off with life, then we'll go on to income protection, then we'll go into critical illness, because that's my priority order.
Yeah, absolutely.
I write about it. So I'm just going to explain in my words what life insurance is, because so I've always had life insurance because I've had a mortgage since I was 24. Yeah. And it's very important when you have liabilities, which a mortgage is money you've borrowed from the bank, you should have life insurance that covers your liability if you die. And I've mentioned the death word. We're going to mention a lot of taboo words in this podcast because it's going to, I've got a life insurance policy that will pay out £300,000 if I die tomorrow, which will pay off my mortgage, basically. Yeah. I have too high a mortgage. I'm very aware of this. I'm very uncomfortable with it. There we go. So yeah, that is, but also you might want to have life insurance if you have dependents, children, or if you want to pass money down the line onto somebody. So you don't necessarily have to have a mortgage to have life insurance, but the sort of premise is that if you've got a mortgage, you should really have life insurance. Yes,
absolutely. Yeah, absolutely. So it's one of those things as well. It's kind of like a bit of a funny one when we're chatting about it. So I come from a couple of ways, but you're absolutely right. If you have a mortgage, you should have life insurance. But one of the things that I sometimes have is that people come to me because they've got a mortgage, or they were planning on getting a mortgage. They found their dream home, and somebody along the line has said to them, "I can't get a mortgage without life insurance, and because of my health, you know, I can't get life insurance through the bank." And it's just like, well, no, you don't actually, you know, and it's a really weird one because I kind of have to go backwards and go, look, please don't worry, you will get your dream home. Nobody can force you to have this. You absolutely should have it. But, you know, so there's a little bit of a weird thing that can happen there. But yes, anybody who has a mortgage, you really should have life insurance in place. But there's a little exception. But the main thing of that is, so when we come at things as an advisor point of view, we're always looking for what's known as the insurable interest. So that is like the key words that we are taught as an advisor. What is the insurable interest? So the insurable interest, if you have a mortgage, is there a partner that's going to inherit the debt? Are there children that are going to inherit the debt? For someone who is single without children, there isn't anybody to inherit that debt. So actually, life insurance for that person isn't as much as a priority as, say, income protection or critical illness cover. You know, it's always a good idea to have it because you never know. And, you know, it could be that in the future, you might have a family and, you know, you want to make sure that the insurance is in place and you kind of lock it in at a good premium when you're young. But it isn't necessarily like really, really essential. But for most people, that is more like the exception. For the majority of people, you want to have that life insurance in place. And as you were saying, the life insurance in itself, it is a case of, it's one of the simplest ones you can set up.
Yeah.
If you have it in place and it's active and you die, it's going to pay out. We don't need to worry about it. There are some little interesting things we can do with it as well. So there's a few different types. So obviously we can do life insurance with the mortgage. It might be that people want to put some life insurance in place to cover maybe some kind of private school fees whilst the children are going through boarding school. Sometimes people want to put a certain type in place in case something happens to them and maybe they've got an elderly relative that they're supporting in a care home, so that maybe other members of the family can then step in and continue to pay the fees. And then there's there's so many things that come into it. Sometimes it might be if someone says, right, well, I've got kids, but I don't have a mortgage, or the mortgage is already covered, do I need something else? And you might think, well, actually, you might want to maybe leave 3 to 5 years worth of your income to your family until your children are independent. It might be all the way to the retirement age. Obviously, we then also have things like whole of life, which would be more covering things like inheritance tax or funeral expenses. But there's lots of ways to set it up. You've got level life insurance, which basically means if it's £100,000 now, it's £100,000 in 20 years' time. You have decreasing, which is £100,000 now will kind of drop at a similar curve to what your mortgage will be decreasing at. And then you have increasing, which obviously goes up similarly to RPI. And then to make it even more, there's also then something known as family income benefit, which I don't think lots of people know about. And it's not an income protection policy, even though it says income in it. That's another really fun thing about the insurance world, is that they change the words for different policies around, and you kind of think, oh, so that means this. And then you're like, no, it doesn't mean that at all. So family income benefit is one that you set up again, and it's more to do probably like with your income levels, but it is to do for if you were to pass away. So say like if you have someone and they've got children and you say, right, okay, what we want to, if something happens to me, I need to know that my children are going to have enough money to kind of like be able to live and maintain a standard of living, the bills, everything, right up until the age of maybe 21, sometimes 25, possibly. So you'll say, right, okay, so we need, I don't know, 10 years worth of cover, and I want them to have £30,000 each year. So then simple maths for me, so we can do it quickly on here. So we're going to put in £300,000 worth of family income benefit. And what's different about that is that it kind of like, it starts off with a bit of like a kitty. So you've got £300,000, but then after the first year's gone, so we've done 30,000. So it then becomes 270,000. And then after then the next one, it's 240,000. And it keeps doing that. So it's kind of a decreasing policy, but it's not also if you go for decreasing policies. So there's just so many ways of setting things up and so many eventualities that it can maybe come into it as well. And also little add-ons. And
that probably sounds quite confusing, if I'm honest. Like there's a lot of information you just said there. So what I will say is, because I have sorted out my protection requirements quite recently, actually. I sorted out my life insurance because I didn't have enough in my existing policy. I did it during lockdown, actually, and it's a very confusing system. So what I would always say is talk to an independent insurance broker who has been recommended to you. Absolutely. So your company is an example of this. So we have to give you a shout out. But I personally used Life Search, and I know that you think that they're amazing as well. So but they're two really good brokers who are independent, who can assess the whole market. They will ask you all the right questions, which is exactly what you've been talking about there. And they will then be like, right, okay, Lynn, you need this policy with this insurer, and that is going to meet your requirements. So you don't have to take on any of the mental load. And also, you don't even have to pay for this service, because you are paid a commission by the insurance broker.
Yes.
So that's how your commercial model works, isn't it? That's how your business.
Absolutely. So yeah, and I think sometimes that can confuse people in terms of the commission and things like that. So I do apologize for doing like that massive kind of blah, 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 blah about what life insurance is, but there's just so many aspects to it.
Yeah.
But yeah, in terms of the commission and things like that, sometimes that confuses people because, and so they think, well, how does this work? So there's two main ways.
Why is this free? Like, there must be a catch.
Well, that's the thing, exactly. So what happens is there's two ways that an advisor works. So typically, like your pensions, your wealth space, they will typically do a fee, because the way that their regulation is set up, they're not allowed to take commission. So they will do a fee for their services, which is absolutely fine. It works really well. And it might be that you can do these life insurances with an advisor who charges a fee. It depends on what's right for you as an individual. Or you can speak to brokers like ourselves who are more of a commission-based. And what that means is, we do the work and everything like that. If a policy starts, so if it doesn't start, we don't receive anything. But, if a policy does start, then that kind of triggers things where the insurer pays us for having helped the person. And we can't make the premiums higher. So say, like, I can't suddenly go, well, if the premium's £10 direct with the insurer, I can't suddenly make it £15. If it's £10 direct with them, it'd be £10 with me. The only difference is that the insurer pays me some of that, and also you get the protection of, not saying I would do, but if an advisor does anything wrong and you use them, then obviously you've got the backing there of going, well, actually they've done it wrong and I'm going to make a complaint. And there's obviously all regulation in our systems and our industry that can step in and help and everything. But if you do it on your own, again, it's fine, but you don't then have that support and like that backing of knowing that somebody, you can maybe go back to someone and go, oh, what do you do?
And it's like, well, just life insurance, for example, the policy that actually I had quite an issue with my policy last year, which I'll share that now because I've had issues with two of my policies. But I needed to increase my life insurance because I've got 200 grand in place at the moment, and I need it to be 300 grand. So to try to sort out my new 100 grand top up, because I've got 100 grand gap. But because I've got ongoing blood issues, which I've talked about in public before, so I've got low platelets. Basically, it's nothing serious in the slightest. It just means I have heavy periods. And it was an issue when I was pregnant, and I bruised. So, but anyway, I was actually refused life insurance because it's always being investigated. Like, I'm always under the care of a gynecologist or a hematologist, and they won't actually top up my life insurance because of this ongoing stuff. So I'm a little bit, I mean, I've got 200 grand worth of cover, so it's fine. But it's a bit of a,
it's a tricky one, is that? Because it's one of those things.
You could probably sort it out, actually, because you're a specialist.
It's one of those things I'm more than happy to look at, but it sometimes comes down to a little bit of common sense. Like, one of the things that we have as well is we do have specific things where we speak to like more of the really experienced underwriters at different insurers. Ultimately, it's the underwriters that make the decisions. But yeah, it can be quite hard because, like, you maybe speak to someone who's got rheumatoid arthritis. Now, one of the questions is, are you due to have any follow-ups? And it's just like, yes, every 6 months they are due to have follow-ups. Someone who's living with HIV, yes, probably every 6 to 12 months. So the insurers do take more of a pragmatic look at it and sort of like say, actually, you know what, there's certain situations where, yes, and actually we want them to be going and seeing people regularly, because then that means they're going to be on top of things, they're going to be really healthy compared to what's going on. And then there are other times, but just like you saying though with that, so as an example, if you were just going, I don't know, even maybe for a bit of a routine blood test or something, and it was going to be in a week's time, if you go for insurance and you're saying, and they're saying, are you doing any tests? And you go, well, I'm just going for a blood test next week. They'll go, okay, we're probably going to want to see what that blood test says, because they're going to be thinking, why having the blood test? Was something going on? Is something going on? And that's why you're getting it done, because you don't just generally have a blood test. And so they'll want to see that. But, there's so many things that can potentially change things. Like, a really good one to think about as well is smear tests. So if somebody has any abnormal smells, of normal cells in the smear test, then obviously, you know, there may be some kind of treatment that's going to be done. It might just be left, but the insurer is probably going to want to see a smear test that's got a normal reading.
Yeah.
And that, depending upon the situation, that might be a year or so before you'd get that. And that can be quite a surprise to people as well, because especially as women, we just kind of think, well, smear test is just one of the things we get done. It's all done and dusted. Oh yeah, there's some cells. Obviously that's worrying when the cells happen, but it's a case of, right, they've told me I just need to go to the hospital, a little bit of laser treatment, all done and dusted. But then you might be thinking, but hang on a minute, I still have 10 months before I can even get the insurance with a lot of insurers. And it can be really confusing. But yeah, it's the majority of people are probably going to have something that can just go straight through the applications, but especially in the space that I work in, seeing the amount of people who do obviously have health conditions and looking, obviously I do training on this, seeing the statistics in terms of how many people are going to get different things. It is one of those things that I say to people, don't leave it. So like sometimes I'll chat to people and I'll give them recommendations and they'll go, yeah, that seems all right. You know, obviously that sounds good, but I think what I might do is I've got a few things on at the moment and I might leave it for 3 months. And it might be that we have literally the terms there and then. Yeah. And one of the things I do like to say to people is, for the majority of insurers, if anything changes during that 3 months, it can completely change everything. And it is horrible to think about, but you just never know what might come up in those 3 months. And just, if you've got the terms and it's the cover that you wanted, just get it in place.
Go for it. And it's not inexpensive either. So when I took out my first policy, so and this is the benefit of taking it out when you're young and when you're healthy. So my first policy was when I was 24, 25. I was a non-smoker. I was probably a bit overweight. But it's £6 a month. I still pay to Legal and General. And it was a 25-year term. So I've got that until I'm 49. I do need to sort out my life insurance for beyond there, but anyway, that's far down the line. But then I took out another policy for another 110 grand, maybe 10 years ago, and that cost me £14 a month. So, and actually I did have to declare my health issues then. And also the thing that flummoxed me a little bit, and actually I got refused for life insurance when I was younger, is because my parents both died of heart attacks. So mum was 58 and dad was 63. That's a difficult age, isn't it? Because that's almost too young to die of a heart attack. So I did get refused life insurance by a few companies because of that. But that, I think, has moved on. I now think that age has changed to 65.
For most of them, it's age 65. They'll ask before the age of 65 if anything's happened. Some of them will ask before the age of 60. Yeah. And it does depend upon the situation as well. And, you know, yeah, obviously it's a horrible situation when something like that happens, but the family medical history does come into play. But I think where it really comes in is the critical illness policies. That's where that kind of can really kind of put changes in that you kind of like, you know, it can sometimes be hard to that. But like you were saying, in terms of the price, it's one of those things as well where life insurance, there was a report came out recently and it was to do with small businesses. But obviously a lot of small businesses are kind of like individual person mentalities rather than corporate mentalities. Yeah. And in that, it showed that like with small businesses, they generally think that these insurances are going to cost 4 times more than what they actually do. So, you know, life insurance can, you know, it starts off, it's one of those things where it's silly cheap. You know, for the majority of people, it is silly cheap to the point where you're like, really, you know, if people really looked at it, they'd be like, yeah, I'll absolutely have that. Yeah. And
same as mobile phone insurance. Yeah. In some cases, yeah,
absolutely. But sometimes, folks, the premiums can be increased depending upon the situation. And sometimes go, well, if they're going to be increased, then, you know, what's the point? You know, why should that end? But then, and whilst having a premium increase isn't nice, you know, it can sometimes be there. But so like if it started off at £5, then the increase might be something like, well, it becomes £7.50 or £10 a month. Yeah. So it's still really within a range that's probably affordable to a lot of people, but it's just having that kind of thing of it being laid out in front of you. And also as well, having somebody say to you, right, before we go into all of this application and all this kind of thing, this is what we're going to be seeing. What you've seen online is maybe not what you're going to get. This is what you're going to be getting.
Yeah. And I think thinking about the emotional side of it as well, which you've already touched on. Yeah, you are having to face up to the fact that you're going to die, but come on, we're all going to die. Like, there's nothing more certain in life than death and taxes. That's the phrase, isn't it? And I just find it, and I always have found it hugely reassuring that I've got life insurance in place to know that my dependents, like my children, won't have to worry about the house if I die. Like, the house will, well, it will, when I sort out the extra 100 grand I need, it will be sorted out. But yeah, it's the peace of mind, I think, that life insurance gives you.
It is. It absolutely is, because, and that's some of the questions that as an advisor we have to ask, but we also have to ask it very carefully, because we can't scaremonger people or make people like, because obviously they might be going through something really emotional. So you might have somebody that's come to you, for me, I might have somebody who's come to me with a recent diagnosis of something that's really scared them, or maybe a loved one's just passed away. And that's not always the case, but it can be. And, you know, it is asking that question, right? If something happens to you, in some ways, how long will it be before your family can't afford to keep up that mortgage, and they're going to lose the home? And it's a really horrible thing to face, but unfortunately it is things that people are facing, and it isn't something that happens to somebody over there down the street a few houses. You know, it can happen at any time to anybody, and it's really scary how often it can happen.
Yeah. I a friend of a friend, actually, because I get asked all kinds of random financial guidance, and you know, most of the time I know the answers, sometimes I don't, and I have to speak to people like you to get the answers. But yeah, friend of a friend, her husband died, and she's like in her early 40s, and she knew nothing of his financial affairs. He was self-employed. Turns out he'd taken out like several mortgages, and there wasn't enough life insurance, and it was just a mess of a situation. It's like, you've just lost your husband who you loved, and now you're having to deal with all this financial crap afterwards. It's just,
yeah,
you can see how people just will bury their head in the sand and not
Absolutely.
and then get into a huge financial pickle where they end up losing their house. And so yeah, it's just for the peace of like mind of a little life insurance policy. It's like, please do it. Do you know the stat of how many people don't have life insurance policies?
I don't actually, but there is a huge, what's known as the protection gap. So that's something that's like some words that are thrown about in our industry. And the protection gap is the amount of people who should have things like life insurance and things in place for like mortgage liabilities compared to how many don't.
Yeah.
And I'm sure, I could be wrong, but I'm sure it's in the billions. You know, it could be millions, but I think it's billions. Don't know off the top of my head, but yeah, it's scary how little protection insurance people have in place. And not just the life insurance, all the other things as well. And I think sometimes, you know, we're talking about something that isn't, I always like to say it this way, it isn't sexy. It isn't something that we want. It's something that we're going to be paying for every month, that we're going to look at it and think, well, that's a bit of a negative thing when I see that come out, because that's my death tax there kind of a thing. And, you know, I'm paying for it, and it's either a piece of paper in a drawer or it's an electronic file on your computer. You can't use it, you can't, you know, but I say that you can't use it, but now a lot of insurers offer what's known as value-added benefits. And these are things,
is that with life, or is that just with income protection?
Can be with, it's a tricky one. It can be with any policy depending upon the insurer.
Right.
So there's some really, really amazing ones out there.
Yeah.
And obviously I'm not meaning to like name drops particularly anybody, but as an example, AIG as an insurer, they have like the most extensive version of this, and it is incredible what you can have. So it's what the value-added benefits are non-contractual. So that basically means they can change at any time or be removed. But as we were saying, life insurance is so cheap now that really the only place that insurers can compete is in these extras. So it would be very strange, I think, for an insurer to completely remove them, or if they were going to change it, not change it to something similar, obviously better.
Yeah.
But when you come with that, depending upon the insurer, and if you do have insurance, double check who your insurer is and find out, because a lot of them now, they've added it on, but it's not necessarily.
I don't know about this.
people, but some of them as well, they'll say, oh, we're giving it to people, but for people who've had policies from this age, this year forwards. So just double check. If you're not sure, ring up your insurer. But basically, there's so many things, and it's not just for the policyholder. It's usually for their partner and their children whilst they're still in full-time education. It can be things like remote GP access, 24 hours a day, 7 days a week, which we have a specific type of, obviously, being what I do, I have insurances everywhere, but also we have what's known as group insurances for our company, which is where you give the insurance to everybody in the company, and it's something they can access. So part of ours is that we have this for all of our teams. Like during lockdown, obviously none of us could see a GP face to face or anything like that. So it'd be a case of us quickly going on the app on our phone. You know, it'd be a case of, right, 8 o'clock at night, my kid's not well, this is what's happening. Put it in, put a photo in potentially if you needed to. Appointment the next day at 12 o'clock, video GP. They can do prescriptions, they can do trigger follow-ups with your GP. And that's just one thing. You then have things like second medical opinion services. So if you have been diagnosed with something like cancer, you can then have access to specialist doctors who will double check all of your blood results, make sure that you're getting the right treatment, the right diagnosis. You've got specialist nurses that are to hand, counselling, well-being services, nutrition, loads of stuff. Absolutely knows, but each insurer does a different set of mixture of these. And it's really, really worthwhile knowing, because I say you're not paying
just
extra.
Write this down.
You're not.
I knew it, actually. I didn't have a clue about this. Oh my God.
No, so it's really, really important. So as I say, like for us, for our team and that, you know, straight away, they were saying to us during lockdown, they were just like, we are so glad that you have this in place for us, because our kids, you know, we need them to see a doctor. And obviously with COVID, obviously with everything that's going on, even with the cold, you know, everybody's worried, you know, you're trying to get them. And you just straight away have access to a GP. And what's really good with some of them as well, I've got this really good example for me. We were in Malta a few years ago, obviously pre-COVID and everything. And one of my kids started to have like a bit of a weird, not rash on his skin, but basically he was tanning beautifully. And it looked as if someone had used an eraser on him, and his skin was suddenly like pure white in some places. And I was like, something's going on. So we contacted our system that we had at the time. And there we were, lunchtime the next day, you know, had our bikini, well, I had my bikini on, Alan obviously had his trunks on. And, you know, I put on a little bit of a top, poolside, bright sunshine, video GP, consultant in the UK, speaking obviously in our native language, really easy. They were able to put my mind at rest. They were able to like turn the video around, show them and everything, what he's like. And they put my mind at ease straight away. And it was just perfect. And I know as well, Alan had something once where obviously we're in North Yorkshire. He was in London at an event. Something was going on. So he rang them up, spoke to them, and they had prescriptions sent to a Boots that was near about a 5-minute walk away. You know, so it doesn't have to, it's not like specific to where you are. It's really important. The value-added benefits are the things now that are kind of like especially for life insurance, that are like the right, what do we have here? And what am I getting? Because these aren't just for when you do a claim either. There can be, for a lot of the insurers, it can be something that you just access at any point.
So, right, we need to talk about income protection insurance. Because I forgot to check what time we started, but I reckon we've been talking for quite a long time.
I'll try and be succinct.
This is going to be a 70-minute again. It can't be.
I'm telling you, it's 71 minutes. That's what I'm aiming for.
Right. So income protection insurance, what that is, I have this product. So I am self-employed, so it's very important to me to have it. If I get ill and I am unable to work, through whatever reason that might be, we'll talk about mental health once I get to the end of this, then my income is covered. So my income protection insurance doesn't kick in until 3 months after the event, because I've got an emergency fund in place that will cover my first 3 months, and then I have 2.5 grand's worth of essential expenses covered until the age of 60. So if I come down with cancer and I can't work anymore, my income is covered for the next 16 years, 2.5 grand a month for 16 years. It is, yes, it's related to your existing health, and you have to be like careful about what that £2,500, like that is essential expenses to me, which I know sounds like a lot of money, but actually I do spend in excess of £2,500 a month. Just read my spending diaries, then you'll see how much money I spend. Yeah, it's a really, really powerful product. However, if you are employed, it's also something to consider as well, because if you look at your sickness benefits as an employed person, you're probably only going to get full pay for, I don't know, 6 weeks, if you're lucky. I think I used to get 12 weeks full pay when I worked at EE, when I worked at Tesco's, but they're big corporates that give like really good sickness benefits. Most companies do not give that level of sickness benefit. So it's something to consider there. And also the thing I just want to rewind back to on the mental health is I've had 2 different income protection insurance policies. The first one I had like about 3 years ago, they refused to cover me for any mental health issues because I was diagnosed with seasonal affective disorder 15 years ago.
Right.
And I just accepted that, like, oh, that must be all right. Well, of course it's not all right, because that's ridiculous. So anyway, got a new, spoke to Life Search last year, and they were like, no, that policy you've got, that's not right. So yeah, they got me a different policy with a different insurer who they will cover my mental health my mental health issues. They will cover me if I have mental health issues, but only once the policy's been in place for like 12 months. So they've got like a 12-month grace, which I've actually gone past.
Yeah.
And now I'm covered for any mental health issues, despite my history of having seasonal affective disorder.
Yeah.
Yeah?
Yeah.
So that's income protection insurance. It's really important to me to have it. And again, it's probably more reassuring than the life insurance because I'm more likely to get an illness than to die.
Yeah, absolutely.
Yeah.
So there's a couple of calculators that are really interesting when it comes to income protection. So you've got things like L&G have one which is called Deadline to the Breadline. LV have a calculator, as well as calculator. It's one of the things, again, I do in the training that I do for advisors in our industry. And I'll say to them, right, what is the likelihood of me dying before the age of 70, 80, what do we expect? And it comes out something like 5%. And it's like, what's the chance of me getting a critical illness? So cancer, heart attack, stroke, Parkinson's, something like that. And it's about 14%. And then it's like, what's the chance of me being ill and unable to work for more than 2 months? And it's 50%.
No way.
Yeah, absolutely. And it is shocking. And the thing is for me is that I see life and income protection as equal in terms of priority. If anything, possibly income protection that bit more. And it's one of those ones that it is more expensive than life insurance usually. But a good friend of mine always likes to say the statistic of saying it's usually about £1 a day for income protection for a lot of people on average. Yes, Roy McLaughlin. No, Roy McLaughlin says it.
Tom Bakery has said that to me as well.
No, absolutely. That's kind of like what the average cost is. Sometimes, obviously, it's more, sometimes it's less. There's lots of ways to set up income protection, and I will try not to be too jargony and keep it as succinct as I can.
I'll be like, nope.
But yeah, in terms of income protection, there's some really good, and it's an old and tested example. But if you had a box in your front garden that paid out your £2,500 in, it's going to pay you out that every month on the 28th at 9 o'clock. What would you do to protect that box? That's the only money you're going to get at all. And the answer is you're going to build something around that, probably some nice sturdy steel device, maybe with eye laser recognition, some thumbprints. You're probably going to be out there with someone else. Somebody's going to be watching the neighbours, making sure they're not going to try and come in and steal your money. You're going to run into the house. You're going to lock it up. And you would do all that. And it's kind of like a case of, well, can you think of yourself as a cash machine? I know it sounds awful, but do. You are the one that is paying for everything. So people get pet insurance. There's so many people pet insurance, which is understandable because pets are expensive. But who's going to pay for that pet insurance if you are not earning? And you may pay for washing machine insurance because you're thinking, oh God, I don't want to pay £2,000 for a new washing machine. Okay, well, that's what, maybe a couple of months or, a month or just over a month or so of your income. One is if you're not working. A lot of people I speak to do not have anything above statutory sick pay. And I was doing this for a blog the other day. So statutory sick pay is £96.35 a week. Now, that is something that, a lot of people go, oh, we fine for statutory sick pay. And it's like, okay, so it's £96.35 a week. And they go, yeah, that's fine. And you go, right, you do realise that that's less than £2,700 for you to live off for 28 weeks. We're talking probably 2 months worth of income over 28 weeks, 6.5 months. It's when you start looking at the numbers, and you do really need to look at the numbers, it is shocking.
Yeah.
With income protection, what you're saying though is absolutely right. You've got your buffer there. So people might have a buffer that they say, well, actually, I don't need it kicking in before 3 months, maybe even 6 months, which is absolutely fine. Obviously, the longer before it kicks in, the cheaper it is.
Yeah.
But at the same point, you need to make sure in terms of like your work, if you get 3 months sick pay from work, you don't want it kicking in before 3 months, because if it does, you'll be paying for a more expensive policy.
Yeah.
And the insurer will not pay out. Even if you've been paying for it, they will not pay out before that sick pay stops at your employer. And you might have 3 months full sick pay, 3 months half sick pay, or something similar. Again, the insurance policies can be set up to kind of mirror those situations. And it's so important. Ultimately, everything that you do, every part of your living, every part of your partner, your children's ability to live as you do is based upon that income. And, it's one of those things as well, it's a certain percentage of your income. So you can't insure, if you take home, I don't know, £1,900 a month, you won't be able to insure £1,900 of take-home pay, because the intention is obviously from this, you're not going to be paying tax and things like that. Yeah. Whatever you insure, that is exactly what you're getting. So the whole point is that, obviously you insure a good amount, but it needs to also not be as good amount so that it's better not to be at work, in a sense, sort of like if you can get back to work, they would hope that you can do, but the insurers have lots of things in terms of rehabilitation support. Yeah. So, it could be as well that if you've got a 3 month, deferred period, it's what it's called, before it kicks in. And you notify the insurer because you're just like, oh, you know what, I've broken my leg. I've been told I'll not be well for this long, quite a nasty break. They'll get people involved. They'll get occupational therapists, physiotherapists involved before that 3 month even kicks in to say, right, let's try and support you. And it's not that they're saying, right, like you have to do this and we expect you to be this well by this point. It's just them saying, let's try and get you healthy as quick as possible, because one, it's a benefit for you because you'll be healthier and you'll be back at work. And I think, obviously as well, ultimately, a lot of people, if you are ill, obviously there's certain times when you're ill and you don't want to get back to work because, things are just too much and too intense. But for a lot of people, work is a really big part of their identity. Yeah. And I think I go back to my dad. My dad has Parkinson's, and he was medically retired with Parkinson's. And it was a huge shock for him because he'd been a police officer and he was one of the ones that decided who went to court and who didn't. He would check all the Crown prosecution evidence and everything like that, and check the police officers, what they'd done. So really important job in the area. And he went from that to being unable to do kind of simple paperwork. And, it was a huge blow for him, really big. And, for a long time, it was hard for him not to accept going back to work. If he could go back to work, he absolutely would do. He would really like to do that because it's such a big part of him. But yes, income protection, you need it. Basically, if you look at your outgoings, your council tax, your water bill, all your essentials, and you don't have enough in savings to be able to cover that for a good long time, then you really do want to be looking at things. But like you were saying, in terms of the exclusions, the main claimable areas on income protection are mental health and back pain. And it is one of those things with income protection that they do like exclusions, because it is that kind of thing of, again, using Parkinson's as a bit of an example, for the majority of situations, if you were going to arrange income protection of Parkinson's, they're not going to want to cover Parkinson's as a claimable event because you already have it. So in a sense, you could start the policy and claim from day one. And it's the same with other things. So if you've got a history of mental health or back pain, it's quite likely that you'll have an exclusion on for that. And then it comes down to what feels right for you. There is an exception though. And a big exception is what's known as group income protection. And that's the one that's set up by an employer for their employees. And so for group life insurance, which is set by a limited company for its employees, or group income protection, there is a certain amount of what's known as free medical underwriting. So there won't be any exclusions, and you can have the cover, and it's very, very well priced. But obviously it is one that the employer has to pay for, and it does depend upon whether or not you're with an employer who wants to do that. But these policies can be set up from a group, can be as little as 2 people sometimes. So it's really important.
I think that might be what I have, that I run through my company, maybe, but I need to check.
Good, I'll be happy to point you in the right direction.
But no, I'm happy with my income protection policy, which is with, I can't remember the name. It'll come to me, but I know who it isn't. I know who the policy was before. I just can't remember the new one. But the only value added benefit I can remember they give me is I've got access to counselling.
Right.
And it's free. It's just part of my policy. So I actually need to take advantage of that, because I was just thinking this morning that I need to like touch base with my therapist again and book some appointments, but I could just get some free counselling instead. So that's good. And I was also just going to say, in terms of affordability, so and I've already explained all my sort of medical history and stuff. I pay £34 a month for my income protection insurance, which is, I suppose, is quite a chunk of money, but it doesn't feel it's that £1 a day thing you're talking about. It feels right. It feels reassuring. I am more than happy to pay for it. But when it comes to critical illness insurance, I have made the decision that I do not need that because it feels excessive. So critical illness insurance to me is if I get diagnosed with a critical illness, something like cancer or Parkinson's or motor neuron disease, all these kind of very quite scary things, a chunk of money is paid out to me. And that's it, basically, isn't it?
Yeah. Essentially, yeah. So critical illness is one of those things that people tend to think of income protection and critical illness as an either or, because a lot of the time it comes down to affordability. And it comes down to what really feels important to you. And it's say for me, I tend to err more towards the income protection when I'm advising people, but ultimately some people, they can be really worried and want the critical illness. Critical illness cover is I'm going to say it's a bit of a pain, to be honest. It's a really, really good policy. It's so complicated because the main things that you need to be covered for on a critical illness policy are cancer, heart attack, stroke, and multiple sclerosis. They're the 4 main ones.
Right.
But the majority of them cover about 60 conditions. And if you go to someone like Vitality, they have serious illness cover, which works differently. And they have well over 150 conditions that they're covering. Now, the likelihood of you being diagnosed with something that's not cancer, heart attack, stroke, or multiple sclerosis is probably not as high as those. They are really very, very clearly the main claim areas. But it is worthwhile having, obviously, as much as you can. But we had a thing in the industry for a while where there was kind of this thing called the conditions race. And it was a case of, oh, well, we do 70 conditions. Oh, well, we do 72 now. And it was like that. And you're kind of like, really? Kind of thing. You're just kind of looking at it. And it was like, really? Do those extra 2 conditions mean something? But then it also depends upon the definitions, because each insurer does something slightly different with definitions. So you have Guardian offer heart attack as their as part of their offering, and it doesn't say of a specified severity. It's just if you've had a heart attack, we're paying out. Whereas a lot of insurers, if you have a heart attack, it will say of a specified severity. Now, not going too much into medical things, but if you have a heart attack, you have something which is known as troponin levels in your system, and your levels would have to reach a certain level for those insurers to say, yes, you had a strong enough heart attack to be awarded this, which is, fair enough. And then you have the same for cancer. So it's a case of, and then you kind of get to the thing of like, because you obviously as an advisor, as a consumer, you don't really know these really sort of like things in the background, but it's like with cancer of a specified severity, and it's just like, right, okay. So cancers come in different stagings and gradings. So it's kind of a case of like, so hang on, to get the full payout for you, does it need to be stage 3, grade 1, or does it need to be stage 2, grade 3? And it's very hard to know. Basically the way that I say to people, because people do say, well, what does it mean? And I'll turn around and say, to try and be as clear as possible, as I possibly can be based upon what we know, I will turn around and say, right, let's put it this way. If you have a mild skin melanoma, so a little bump on your skin, and you're going to go to the GP and they're whipping it off in 20 minutes, you're not going to get £200,000 payout to you. It's not going to happen. Obviously, skin cancer can be very serious. It can spread to the lymph nodes, and there's other things that can happen. But in general, that's kind of I think a really simple way for people to kind of get it in their mind. It's when it's going to be not nice. It's when your treatment is going to be intense. That's when it's going to really come into play. But then you also have what's known as partial payments. So the majority of insurers, you'll have 100% payouts. They'll say the 60 conditions, 100% payouts. Good. And then they'll say, and there's this handful here. And if you have these, we appreciate it's not going to be nice. It's not going to be as bad as these ones over here. It's still not going to be nice. So we'll pay you a certain percentage, which is usually around 25% of the full sum assured, up to £25,000. It depends on the insurer. And so that's obviously something that can come in, because then people think, well, hang on a minute, whereabouts, but the main thing that I would say for people, if they are looking at critical illness cover and they're not using an advisor, is be careful of these definitions. Because when I look at a policy and with an insurer now, I will generally have, for each insurer, I will have 4 critical illness policies to look at. I will have their core version, which is, say the core conditions. So maybe not 60, maybe 40 or something, but and then I'll have core conditions that also includes children on the cover. So a certain amount of cover for children up to the age of them being in education. I will then have their critical illness cover that's all singing or dancing. That's the way that I like to put it. And then there'll be all singing or dancing cover and children covered. So each one of them has a different price bracket depending upon what you're doing. So, sometimes again, when I'm advising people, I'll say to them, I'll be very honest. I'll say, right, I'm going to give you all singing or dancing version. If you look and do stuff, you'll probably see a cheaper version because it's not going to be the all singing or dancing version. I can do that for you, but I'd like you to see the absolute best. And then we can see whereabouts everything feels like. And if obviously somebody just wants like the basic version, I can do that in a sense straight away. But it's just making sure, and there's other things as well in the income protection, but I don't know if we'll have time. But there's bits in the income protection side of things as well, where it's just really important to look out for. And if we do have time, I'd really like to go into those just a smidgen. But then, you've got that, but then obviously if you've got vitality, you've got serious illness cover, and they do payouts from like 5%, 10%, 15%, certain percentages all the way to 100% on loads of conditions. As again, it's like saying, right, well, we think this is this severe for you, so it's going to be paid out this much. So there's so many things to play about with.
Sounds, I'm sorry, but it sounds like an absolute nightmare. Like I know a lot about insurance and protection, but this is just like for the layman who just wants to sort out their protection needs. They've got no chance of understanding this kind of stuff. They really don't. So I think just the baseline is, I really would, and this is my view, like I am only guiding, I'm basing it on what I would do. I'm not an advisor, blah, blah, blah. But I would engage an independent advisor, because you're just not going to have a clue, and you're going to end up taking a product that isn't fit for requirements. And then if something did happen, it's not going to pay out. So you're in a bit of a, and I'm not promoting you. I'm not promoting Life Search and every other insurance broker out there, because these podcasts are not sponsored. You are on here because you know your shit and you're my friend. But
well, people can, if they want to. Just as an example, there is so BIBA, so the British Insurers Brokers Association, do have what's known as a find an advisor. And just to be clear and transparent, yes, I am listed on there, and Life Search is listed on there too as well. But basically, there's a handful of, well, not a handful, good amount of protection advisors that are on there. That if you did want support, you can contact them through there. And we've all had to be very heavily vetted by BIBA, that's what the acronym is, to be able to be on there. So, yes, absolutely. I mean, there are so many people, as you said as well, word of mouth is really important as well. But, I always think as well, big thing for me when I say to people is, when you speak to an advisor, do you kind of mesh together? If you mesh together, then you're going to walk away from there feeling confident in what they've said. If you don't, then you're going to be really thinking, and you're going to think I'm paying for something I don't need. And then it's just going to be, Do I have time to make a very quick comment about the income protection? So with income protection, again, you might see very, very big differences in terms of pricing. And again, it's a load of fun with this. So, so the reason being is, and I've got a really good example of this, I had somebody where I could get them a guaranteed premium. So I'd lock it in place now. It'd be that price all the way up to like age 68. Or there's a version called guaranteed age banded. So basically it's guaranteed and it's going to increase each year with their age, but it starts off a lot cheaper. And it's really tempting. And then you also get reviewable versions of each, but I won't go into that. But as an example with this person, like I said to them, right, I can get you guaranteed age band. It starts at £75 a month for this person in their situation and in terms of their income level. So obviously it was a good income we were covering. And they were like, that sounds okay. I was like, but I really want you to consider guaranteed. And it's £120 a month. Automatically, any of us are going to go, I'd like the £75 a month version, please. You know, because you know, it's a good difference. Mm-hmm. However, what's really important is to ask to see the illustration or have it explained to you, because the full quotation, because in the long run, the £75 a month age banded goes eventually over £120, and over the full life of the policy, it was £90,000 dearer to start off with. I'm not getting my numbers wrong there. It was £95,000 dearer to go with the initial £50-ish a month cheaper policy than it was just to lock it in place. And so it can, you know, there's definitely is so tempting sometimes to go for the cheaper option, but it's really important to keep an eye on what that premium's being said and any kind of things about it potentially changing, because it makes a difference.
I think because I've talked about money for life insurance for me, and I talked about the cost of IP income protection insurance for me, is, as a comparison, critical illness insurance, is that on a par with income protection?
It generally, I always like to say roughly, whatever you see for life insurance, expect it to be multiplied by about 4 or 5 times in terms of income protection or critical illness. The reason being is that it's about that much extra in ratio that you're going to be claiming on that policy. That is why, that's the whole reason it's more expensive, is because you need it, and it is probably going to be that you claim on it at some point. And it's a horrible situation to face. And you know, there are people that sometimes when you say these things, I just say, look, I just cannot afford to put that aside. But there are so many ways, especially with income protection, there are so many ways to tweak it to match your needs and to make it affordable. Critical illness cover isn't, you can tweak it, but it's not as easy, whereas income protection is loads of things we can play about with. They are comparative price-wise.
I can reduce my £34 a month significantly by not drawing on it for 6 months rather than 3 months. That would probably take a third, a half off. I'm making up numbers, I'm not an advisor.
It does, it makes a huge difference.
So in fact I might actually do that, because I've got 6 months worth of emergency fund set aside.
It's completely up to you. You know, it's absolutely completely up to you. But yeah, it does. And it does reduce the premium. And also as well, if you are someone who's used nicotine at all, if you are a smoker, and when we say in insurance world nicotine, we're talking anything, gums, patches, e-cigs. If you do that, for the majority of insurers, you'll be classed as a smoker. If you're classed as a smoker, the majority of your premiums will be double compared to somebody who isn't. Wow. So if you have stopped smoking and you were on smoker premiums, and you've stopped smoking for at least 12 months, it's worth trying to speak to your insurer to say, I've stopped smoking. They may ask you to do what's known as a cotinine test, which is a little like cotton wool swab in your mouth to prove you've not smoked for 12 months. And it means that your premiums they won't necessarily halve because of the fact that you'll be older than what you were there. But it'll be a nice drop in the premium.
That's a really good shout. Okay, cool. I think we've covered a lot there, and I'm sure we've been talking for about an hour. So we have to stop. We have to stop talking. Maybe because I'm going to come onto your podcast, aren't I? So maybe we talk about women and finances a little bit in your podcast rather than mine, because I feel like we need to put the world to rights when talk about.
Absolutely. I feel like we shouldn't even talk about finance necessarily. Let's just put the world to rights. Just me and you on a podcast.
That's amazing. Like, maybe that should be season 5. Just Kathryn, like talking about everything.
Yeah. What's an orders this past week? Right. Okay, let's start.
Well, you say that. My season 3 was actually with Becky, my best friend, the one I mentioned who I've been mates with since I was 11. We did a whole season on like women's issues. So we had one about body image. We had one episode about women in finance. We had one episode about how to write a book. It was literally like, what do we want to talk about this week? Yeah, let's just go for it. It was really cool. And because we like have known each other like forever and we're best mates, it was actually a really good podcast. But anyway, so if you want to listen to that, go back to season 3. It's all on Spotify, iTunes, all that palaver. So what was I going to say? I was going to say, I can't actually remember. I had a really good point. Oh, I know. It was that, just reiterating the fact of, so this is episode 10, which is, so episode 10 through to 13 are covering the future of finance. So Kathryn starts off with protection. Actually, we haven't talked about wills, but what I'm going to do.
Get a will.
Basically
get a power of attorney. There we go. Pete Matthew, our mutual friend, he's doing episode 11, which he's going to be talking about savings and investments. So I'll get him to talk about wills as well. Boom. Because I'm recording that in 3 days. So Pete comes next with investments and savings. Then I'm interviewing Romy Savova, who's CEO of Pension Bee for pensions. And then episode 13, which is the last episode, is really cool. It's called Do What You Love. It's like the final chapter of my book, and it's just the culmination of like all this financial journey. It gets you to a point where, wouldn't it be wonderful if we could like all earn money from doing what we love, which is what you do and which is what I do. But that's the end goal, right? Yeah. That we love to work and we work to love. It's so yeah, and that's with Timmy, Mr. Money Jar, who's this like uber Instagram like superstar, who I was like, Timmy, you've got to come on my podcast. And he's like, yeah, all right. Very nice. We got really philosophical in our conversation, and we started talking about sort of religion, and it was amazing. So so that's what you've got to look forward to on this podcast. So so thank you ever so much for talking to me about this really important subject. It's not boring, it's not dull, it's reassuring. It gives you that hug that you've got a financial product that's looking after you for the inevitable, or not inevitable, but the things that may well happen to you that aren't very nice. Yes. Thank you for having me on as well, because I know this isn't the most thrilling of subjects, and I know that it's so much technical jargon, and I've tried my hardest not to be too technical.
I think I took you down a level by simplifying it when I needed to. That's my skill. I can talk about things in really basic language. So how do people find you? So if people want an insurance product, then Statutory Cura, which is CURA. Particularly if you've got a complicated situation, I always push my complicated people towards you. No referral. I just push them on because as a friend. Although if people do go to Life Search, there is a referral scheme that I've got with Life Search, just to be fully transparent, where I think you get, if you're a customer, you get some cash back for coming via me, and I get the equivalent cash back as a refer a friend bonus. And right, so back to you. So how do people find you?
So obviously we are secure, so as you say, CURA, curainsurance.co.uk. If you go on that, or you search my name on the internet at all, you will find me, because I'm all over the website. I've written a lot of it. So there's videos of me, there's my podcast on there. So similarly, podcast-wise, I'm Practical Protection podcast that you can find on all the major kind of platforms. I'm all over social media as well. I'm really sort of like more on the Twitter space, rather than in other areas. But yeah, I'm pretty much.
What's your Twitter ID?
Oh, I don't know. It's Kathryn Cura. So it's I don't think it's got an underscore. It's just, I think it's my name. So KATHRYN, then Cura, CURA on it. I'm linked with Lynn, so if you go on there, you'll probably see, because we're doing a charity challenge together as well.
Oh, yes.
So we're doing this charity challenge where we are, me, Lynn, a wonderful woman called Eve, and Mel. We are all doing a virtual charity challenge for Grief Encounter, where we are tackling the Appalachian Trail, which is, I believe, 3,167 kilometres. We've tasked ourselves to do this within 2 months and 1 week. So finishing this year, we're all doing it. We're all taking part, and we're doing it via swimming, walking, cycling, Pilates, dancing, basically all about just trying to do lots of stuff to try and raise awareness of this charity. And so yeah, if you go onto Lynn's Twitter account at all, you'll see me somewhere amongst all there, as well as my puppy that arrived at one point, because he goes on the walks with me and helps me raise this money as well.
Yeah, our target is 7.5 grand.
No.
And we're about 1,000 in, aren't we? We've done really well.
Just over 1,000 and only a couple of weeks in. So that's really good. And,
so like I've mentioned Grief Encounter loads of times to my audience, but charity that I'm really passionate about because they look after children who've lost their parents. And I lost my mum when I was 16, and it destroyed my life because I didn't have any help or counselling or therapy until I got to university, age 19. I don't know how I got through those 3 years. And then my dad died. So they're such an incredible charity. I think they're amazing. So yes,
absolutely.
I'll pop a link in the notes. Obviously, I'll share your Twitter and your website, everything else, blah, 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 blah. But thank you ever so much for coming on to Mrs Mummypenny Talks. Really appreciate it, Kathryn. Thank you.
Thank you for having me.
Thank you. Stay there.